The year was 2018. Donald Trump, the 45th President of the United States, launched a series of tariffs, igniting a trade war with global implications. This trade war, characterized by tit-for-tat tariffs between the U.S. and its trading partners, particularly China, has sent shockwaves through the global economy. The question on everyone's mind, is a global recession on the horizon? The Trump administration argued that these tariffs were necessary to protect American jobs and industries from unfair trade practices. They claimed that countries like China were engaging in intellectual property theft, currency manipulation, and dumping cheap goods into the U.S. market. These actions, they argued, were harming American businesses and workers. However, critics argued that these tariffs were nothing more than protectionism disguised as economic patriotism. They warned that these tariffs would harm American consumers, raise prices, and disrupt global supply chains. Moreover, they argued that these tariffs could backfire, leading to retaliation from other countries and ultimately hurting the U.S. economy. The initial salvo in this trade war came in the form of tariffs on solar panels and washing machines from China and South Korea. This was followed by tariffs on steel and aluminum imports from a wide range of countries, including close allies like Canada, Mexico, and the European Union. The Trump administration justified these tariffs on national security grounds, arguing that reliance on foreign steel and aluminum posed a threat to U.S. national security. The tariffs on Chinese goods were particularly aggressive. Starting with a 25% tariff on $50 billion worth of Chinese goods, the Trump administration escalated the trade war by imposing tariffs on an additional $200 billion worth of Chinese imports. These tariffs covered a wide range of products, from electronics and machinery to furniture and clothing. The tariffs were met with swift retaliation from China. China responded with its own tariffs on U.S. goods, targeting key American exports like soybeans, automobiles, and pork. The Chinese government accused the U.S. of protectionism and vowed to defend its interests. The trade war between the U.S. and China soon escalated into a global trade war, with other countries caught in the crossfire. The European Union, Canada, and Mexico all retaliated against U.S. tariffs with tariffs of their own. The EU imposed tariffs on American goods like motorcycles, bourbon, and orange juice, while Canada targeted products like steel, aluminum, and maple syrup. Mexico retaliated with tariffs on agricultural products like pork, cheese, and apples. This tit-for-tat exchange of tariffs created uncertainty in the global economy, disrupting supply chains and raising costs for businesses. The International Monetary Fund warned that the trade war was a threat to global economic growth and urged countries to resolve their differences through dialogue and cooperation. Despite the warnings from economists and international organizations, the trade war continued to escalate. The Trump administration threatened to impose tariffs on all remaining Chinese imports, while China vowed to retaliate in kind. Section 4. Economic tremors. The ground begins to shake. The economic impact of the trade war began to be felt around the world. In the United States, businesses faced higher costs for imported goods, forcing them to raise prices for consumers. Farmers, particularly soybean farmers, were hit hard by Chinese retaliatory tariffs, losing access to a key export market. The trade war also contributed to market volatility and uncertainty. Stock markets experienced swings as investors reacted to news of escalating trade tensions. The uncertainty surrounding trade policy made it difficult for businesses to plan for the future, leading to a decline in business investment. Economists began to warn of a potential recession, citing the trade war as a major risk factor. The escalating trade tensions, they argued, were creating uncertainty, disrupting supply chains, and dampening global trade, all of which could contribute to an economic downturn. Section 5. The consumer fallout. Sentiment and spending decline. As the trade war dragged on, consumer sentiment began to wane. The uncertainty surrounding the economy, coupled with rising prices for consumer goods, made consumers hesitant to spend. Consumer confidence, a key indicator of economic health, declined as consumers grew increasingly concerned about the future. This decline in consumer sentiment translated into weaker consumer spending, a key driver of economic growth. Consumer spending, which accounts for a significant portion of the U.S. economy, slowed as consumers tightened their belts and cut back on discretionary spending. The trade war also contributed to rising inflation. Tariffs on imported goods, particularly from China, raised prices for businesses, which were then passed on to consumers. This contributed to an overall increase in the cost of living, putting a strain on household budgets. Section 6. Global implications. A world on edge. The trade war had far-reaching implications for the global economy. The uncertainty surrounding U.S. trade policy created volatility in financial markets and disrupted global supply chains. Countries heavily reliant on trade with the U.S., such as China, Canada, and Mexico, were particularly vulnerable to the negative impacts of the trade war. The IMF warned that the trade war was a threat to global economic growth, projecting a slowdown in global economic activity as a result of the escalating trade tensions. The organization urged countries to work together to resolve their differences and avoid further damage to the global economy. The trade war also highlighted the interconnectedness of the global economy and the risks associated with protectionist policies. The tariffs imposed by the U.S. and its trading partners created a ripple effect throughout the global economy, disrupting trade, raising costs, and undermining business confidence. Section 7. Conclusion. Navigating the uncertain future. The trade war initiated by the Trump administration has had a profound impact on the global economy. The tariffs imposed by the U.S. and its trading partners have disrupted global supply chains, raised costs for businesses and consumers, and contributed to market volatility and uncertainty. While the full extent of the economic damage remains to be seen, the trade war has undoubtedly introduced significant risks to the global economic outlook. As we navigate this uncertain economic landscape, it is crucial to stay informed about the latest developments in the trade war and their potential impact. Understanding the complexities of this global trade dispute and its potential consequences is essential for making informed decisions in a rapidly changing world. By staying informed and engaged, we can better navigate the challenges and opportunities presented by this new era of global trade.